Hello students, I am Girish. I am having 25 years experience in teaching field. Today I am discussing about a topic bills of exchange, which is actually in BCom first year semester 2. So what exactly bills of exchange? Bills of exchange is a negotiable instrument which is drawn by the trader and accepted by the customer. So why the trader is drawing a bill of exchange on a customer? The reason is when a trader is selling goods to customer on credit basis, credit sales. For example, let us assume 20,000 to the customer. When he sells goods on credit to the customer, customer becomes a debtor. Okay, customer becomes debtor. For example, credit sales of 20,000, you have taken it for 2 months time. Okay, when a trader draws a bills of exchange on the customer, it is a document, it looks like a promissory note. Customer has to sign it. So customer signs and give it back to the trader. This customer is known as drawee or acceptor, and trader is known as drawer. The person who draws the bill is a drawer. Now, when a trader sells goods on credit to the customer and prepares a bills of exchange, which is accepted, and this is given back to the trader. The bill is given back to the trader. For example, bills of exchange of 20,000, which will be signed by the drawer as well as drawee. And in this document, it is specified that I hereby has to pay rupees 20,000 for the goods purchased, and it will be paid after 2 months, dated and so and so. And the drawee address and his signature will be there on this particular document. So when a trader sells goods on to the customers, definitely he will sell to the customers who are well known to him, a regular customer, maybe his family friends, right, or relatives. Okay, so he is not going to sell to a person who is unknown, right? A new customer, you cannot sell goods of 20,000 or 10,000 on credit basis. You sell goods on credit to a customer who is well known to you, right? Then why he is asking this bills of exchange? There is some benefits with this bills of exchange where trader can use these bills for different ways. For example, first, this bill can be retained with the drawer, that is he is keeping. Customer signs the bill and give it to him. Trader will keep it with him, right? It is or kept with him. This is not an advantage for the trader. It's only he's taking the bill and he is keeping with him. It's not an advantage, right? After 2 months, customer pays the amount to the trader and trader gives the amount back, the bill back to the customer. This is one way. The second benefit, the benefit of this bill is bill discounted with bank. This is a benefit for the trader. For example, trader need money, right? Trader sold goods to the customer and trader is in emergency. After 15 days, he got an emergency and he want money around 20,000. He can't ask customer. Trader cannot ask customer because trader has given 2 months time. If he ask in the middle, definitely he will be serious about it. So what trader can do with this bill is when he wants money, he can give it to bank. That is what we call it as discounting with the bank. Bank gives him immediately nearly 19,800 rupees. 200 rupees is the discounting charges. Bank charges discounting amount. So this is a benefit for the trader because when this bill is given to the bank, bank immediately gives 19,800 or some amount, some percentage will be deducted for that 2 months calculation. I am assuming it as 200. So immediately he is getting 19,800. So his need or purpose of that money is fulfilled with this bills of exchange. So this is one benefit. That is the reason they take bills of exchange. The second benefit in this bill is it can be endorsed to creditor, or we call it as third party. This third party is called as payee, right? So who is a creditor here? When a trader is doing some business, definitely he will purchase stock from the supplier and then sells to the customers. So when he purchases stock from the suppliers on credit basis, they are called as a creditors. So now, in case creditor is asking to pay money, the trader can give this bill. If creditor is accepting it, the trader can give this bill to the creditor, and that is we call it as endorsement of a bill. So this is also benefit because you need to pay to creditor. So instead of paying cash, you are directly giving this bill to the creditor. So this is again a benefit for the business, right? For a trader. By taking this bills of exchange, it is also a benefit. Fourth, bill can be sent to bank for collection. Bill sent to bank for collection. This is again not a advantage, right? Trader has to collect money from the customer. Trader asking bank to collect from the customer. This is the four things which you can do with this bill. And the benefit of this bill is this and this. Hope this part is clear. Now, you need to understand what are the transactions happens in this bills of exchange. So according to trader, transactions according to trader. First, trader sells goods on credit. So goods sold on credit. This is your first transactions happens with the customer. That means he is a debtor here. Second, what happens is he accepts the bill. Bill accepted by customer, or we can call it as drawee. Clear? After you receive bill, after the trader receives bill, what is doing with this? Either he can discount with the bank, or he can endorse the bill, or he can bill sent to bank for collection. So this is the way, right? So after bill is been endorsed or discounted or bill sent to bank for collection, what customer has to do? After 2 months, customer has to honor the bill. So bill honored or bill dishonored. This is the 4 transactions which we normally happens in this bills of exchange. So what are the journal entries we pass in this bills of exchange? Here bill is retained. Next, bill discounted with bank. Bill endorsed to creditor or any third party, that is payee, or bill sent to bank for collection. These are the 4 situations which we have. Now here the transactions. Number 1, goods sold on credit. When goods are sold on credit, right, Debit what comes in, credit what goes out. When it comes to the journal entries, always the three rules are very important. So debit what comes in, credit what goes out. When you are selling goods on credit, we are not receiving any money, but what is going out is goods. So goods are going out, credit goods. Instead of writing goods, we write it as sales, as you already know about the journals. And here the person who is receiving is a acceptor or drawee or the customer. Customer is related with personal account rule. So personal account rule says debit the receiver, credit the giver. The person who is receiving will be debited, who is called as a acceptor. Clear? No entries in this because these entries you will get after you receive the bill. Number 2, bill accepted by the drawee, or we can call it as acceptor. So when bill is accepted by the drawee, that means customer is signing on that bills of exchange and he is returning back to the trader. So debit what comes in, what is coming in is bill. So bill receivable account debit to acceptor account, because you are receiving from the acceptor, right? So acceptor is to be credited. So bills receivable. Why we call it as a bills receivable? Since the trader has to receive the bill amount from the customer, we call it as bills receivable. But according to the customer, it is called as a bills payable, right? Now, no entry in this case. Third, bill discounted or endorsed or bill sent to bank for collection. In this case, what is happening? You received a bill here. This bill is given to the bank for discounting or endorsing or bill sent to bank for collection. So what is happening? Whatever the bill you have received is given to the customer, is given to the bank. So bill is going out from us. So debit what comes in, credit what goes out. What you receive when you discount with the bank, debit what comes in. What is that you are receiving? You receive money from bank. So money receiving doesn't mean bank gives you directly money. Bank will deposit that amount into your bank account, the trader's account. So debit what comes in, my bank account is increasing. So bank account debit. Since I am not receiving full amount, discount account debit to bill is going out from me. Debit what comes in, credit what goes out. I am receiving money and bill is going out from me. Bill is 20,000. Bank 19,800. Discount is a loss for us. Losses will always show debit balance as per nominal account rule. So 200 will be debited here. So this is when bill is discounted with the bank. In case trader wants to give it to his creditor, that is called endorsed. So only one bill, either it can be discounted, either it can be endorsed, or it can be sent to bank for collection. So if trader wants to endorse the bill to the creditor, then bill is going out, and who is receiving? Creditor is receiving. We can call it as endorsee. Endorsee account debit to what is going out? Bill is going out. So bills receivable is credited. In case trader wants to send bill to bank for collection, then bill is going out, and who is receiving? Bank is receiving, but we cannot write bank here. If you write bank, what happens is it looks like you received that amount from that bill. So you're not receiving, you're giving bill to bank to collect. So you cannot write directly bank here. You will write it as bill sent to bank for collection, and bill is going out from us. So to bills receivable account. So this is the third entry what you are going to pass. So you have only one bill, then it can be either retained or discounted or endorsed or bill sent to bank for collection. So this you will decide according to the question. Okay. Now, fourth, bill honored. Honoring means bill is being paid by the customer. Honor means bill is met by the customer or paid by the customer. So those things will be recorded in this. Now, If bill is retained, that is the trader keeps the bill with him, and after 2 months, customer pays the money, then he receives money, debit what comes in, and he has to give the bill to the bank, a bill to the bill returned to the customer. So he will receive money and bill is going out from him, so to bill receivable. And in case of discounted, if the bill is already discounted, no entry. Why no entry? Bill is with the bank. Bank has already given money to the trader. Already this whatever 20,000 is has been settled to the trader. It's already paid. So customer directly pays to bank, not to the trader, and trader pays to bank. So customer will directly pay to bank. So no entry in the books of a trader. So these are the entries of trader in the books of trader, right? So here also no entry because he directly pays to the creditor. Customer directly pays to the creditor. So no entry in this case also. In this case, bank is collecting from the customer. So customer paid the money. So bank receives it. So our bank account, the trader's bank account will increase. So to bank account debit to bill sent to bank for collection. We will cancel this bill sent to bank for collection by crediting it. So these are the entries in case if it is a bill is honored. If bill is dishonored, if bill dishonored. Dishonor means on the due date, customer could not pay money. So when customer could not pay money, it is called bills dishonored. So what happens when a bill is dishonored? Trader takes that bill, goes and returns it back to the customer and says the bill is been cancelled. Now again you become a debtor. And definitely trader will ask why it has been dishonored, when you are going to pay it. Right? That's a common questions which trader will ask. So when a bill is dishonored, first situation, if the bill is with the trader, that is retained with him, and then it is dishonored after 2 months, when bill is dishonored, acceptor will be debited because he becomes a debtor again. Acceptor account debit, and whatever bill we have, we are returning it back to the customer. So bill is going out from us and that customer becomes debtor. So again he becomes a debtor, so he has been debited. Now, in case if there is any noting charges, so to cash account, we will record as a separately noting charges. So what is exactly noting charges? Noting charges is the amount paid to a advocate, lawyer, right, that this bill is been dishonored, we need to pay for that. So there will be a stamp and a signature saying that this is the reason. So legally it is valid. So that is what we call it as a noting charges. And this noting charges we will collect again from the customer. Now, in case bill is discounted with the bank and then it is dishonored, then acceptor will be debited, acceptor account debit to bank account, right, to bank account because we need to pay to bank. So bank will directly deduct amount from our account, right, including noting charges, right. We will not write separately noting charges. In this case we write separately, but in this case we will not going to write anything, that is directly paid including noting charges. In case the bill is endorsed with creditor, so when it is endorsed with the creditor and dishonored, same acceptor again becomes a debtor for us to endorsee account including noting charges, right. Noting charges will be again added directly to this amount. In case bill is sent to bank for collection, so same, if bill is sent to bank for collection and then it is dishonored, acceptor account debit to bill sent to bank for collection account because we need to cancel that bill is being given for the collection to bank. Separately we will write noting charges. So these are the entries which are normally passed. It is simple, only 4 transactions. When goods sold on credit, bill accepted by the customer, then bill discounted or endorsed or bill sent to bank for collection. Either bill honors or dishonor. Any one case, it cannot be both. Yes, chances are there if two or three bills received from the customer, one bill can be retained, one bill can be discounted, one bill can be endorsed, or anything, bill sent to bank for collection. So depending on the question, we are going to change the answers. Now we will learn journal entries in the books of acceptor. So coming to the acceptor, what are the transactions? That is, acceptor are nothing but the customer. So what are the transactions occurs in the books of acceptor? First, he purchases book. He purchases goods. So goods purchased on credit. So entry will be when you purchase goods, goods are coming in. So purchases account debit to drawer account. This is the first entry. After this, what happens? Acceptor will accept the bill which is drawn by the drawer. So when he accepts, he gives bill to the drawer. So drawer account debit to bills payable account. So according to acceptor, the bill which is signed, he has to pay that bill amount. So it will be recorded in the books as bills payable. So once the bill is given, the acceptor will, on the due date, either he will pay or he will dishonor. That is either honors or dishonors. If bill honored, if bill honored, the entry will be he receives back his bill amount and he pays cash for this. If bill dishonored, so either the bill will be honored or dishonored. If it is dishonored, the entry will be he receives back his bill. So bills payable account debit, noting charges account debit, because it is expenses for him. So it will be debited, noting charges will be debited to drawer account, because drawer again becomes a creditor for him. So these are the entries which you are going to pass in the books of acceptor. If you like this video, please press like button, subscribe and share to your friends. Thank you.